Here's a chart showing the prices of the world's most popular commodities, like sugar, wheat, and coffee. Prices have soared across the board. But one commodity stands out from the rest, and that's chocolate. Chocolate prices have skyrocketed more than 300% to their record high in 2024, and 211% since 2022. For reference, since 2022, the S&P 500 has risen 11.6%, Bitcoin has risen 3%, and gold has leaped 32%.
Turn our attention to soft commodities and cocoa. That's, of course, the key ingredient in chocolate. It's trading at an all-time high after a dramatic and somewhat mysterious rally, spiking nearly 300% over the last year.
The factors, the disease, aging trees, the farm gate prices, they're still very much in the market, and they'll likely continue to be in the market for the next couple of years, and supply will remain pretty tight going forward.
Cocoa demand around the world is growing, and with surging prices hitting their bottom lines, food companies could start to hunt for chocolate alternatives. Here's why chocolate prices are surging around the world. The actual plant that grows this commodity is called cacao, and it only grows within a certain radius of the equator, where rainfall and humidity support the plant's growth. In fact, the Ivory Coast and Ghana produce 60% of the world's cocoa. The two countries have faced difficulties in production with the El Niño weather phenomenon, crop disease, aging trees, and farm gate pricing. Farmers in these West African countries also farm on smaller plots, like family yards.
We have unusual rainfall, and then here comes the black pod disease. That means that you have to cut down all the fruits because they are not useful again. So that means that your cost of production, even though you have invested, but you don't have the crops. So the farmer is thrown into a very bad situation. So that has been the phenomenon over the period.
Because cacao is largely grown on these small family plots, it's a difficult industry to scale in West Africa. Ghana's government has established a price that farmers can expect to earn on any delivered cocoa, called farm gate pricing, which has risen in recent months.
But in the face of decreasing production levels and the previous contract that our marketing or the government has already entered into, then it becomes a huge challenge. So I must confess that even though we have had some levels of price increases, we think that it is not at a point where the farmer is able to get some profit out.
Look at the futures price today. Farmers and producers aren't being incentivized enough to increase production, and that's why we're not seeing a major increase in production right now, and that's why it's going to be a slow, drawn-out affair.
As a result, production is beginning to migrate to other countries like Ecuador, Brazil, and Indonesia.
In countries such as Ecuador, where we have much larger farms, what we see there is a lot more investment. Farms are run much more like businesses because they're a lot larger. Seeing really impressive growth from Ecuador in terms of production. They're actually catching up with Ghana, and they're not too far away from almost overtaking Ghana in terms of production.
Now analysts on Wall Street have hit the world's largest chocolate makers with stock downgrades, mainly because of surging cacao prices.
The problem with pricing strategies and kind of managing it is no one really understands how much speculation is built in and how much is supply and demand related and how much is weather related.
Go back to the chocolate companies, they're hedged forward, so maybe they could have 8 months cover, let's say. So if you look at the price of on the New York or London contract 8 months ago, it would of course be considerably lower. So it takes a while to filter through sort of higher commodity prices to the shop floor.
For example, Hershey raised prices throughout 2023. It's a little fanfare. Price elasticity increased slightly versus the first quarter, in line with expectations, and remains well ahead of historical levels. The company recently noted in its Q4 earnings that high input costs around labor and commodities will offset the company's pricing strategy.
There's a lot more optionality to take international pricing on chocolate. A, it's lower priced. B, it's you have a lot of inflation in the emerging markets, and those consumers are used to it, right? So that's where you get into a really interesting discussion about Mondelez, like a company that has global exposure to chocolate and very limited exposure to U.S. chocolate, and Hershey, who predominantly sources all of its chocolate revenue out of the U.S. market.
In its latest earnings results, global snack giant Nunley said it was able to weather the surge in commodities costs, and that consumers shelled out the higher prices.
It is obvious that a series of conditions on both supply and demand sides have driven costs up at unprecedented levels. We believe there will eventually be a market adjustment. And while we want to protect ourselves, we are putting in place flexible structures that will allow us to participate to potential upside versus current historically high prices. And by now we have locked cocoa for the entirety of 2024. So we have quite a good visibility on cost.
This volatile commodity market is nothing new. Several other industries saw their input costs rise after pandemic-related disruptions saw the prices of things universally rise, which caused the historic inflation the Federal Reserve is currently working away from.
Think about it. The whole reason investors buy the stocks that I cover, consumer staples, chocolate companies, beverage companies, is because of the consistency of the cash flow. And if you can't manage around the volatility of your input cost to create consistency, that has a big bearing on value creation, and that's the issue that many of these managers are dealing with right now.
The consumer has now begun to move away from chocolate as a tasty treat option. A JP Morgan research paper highlights the myriad of issues facing the chocolate sector, but specifically notes the change in the consumer. We have seen some shifting away from chocolate to other products, whether that's cookies or salty snacks. We think chocolate's losing a bit of share, so consumers are certainly reacting to higher prices.
So if we're looking from the angle of the consumer, certainly I would say the worst is still to come in terms of the price increases they're going to face, even if we were to see, a big reduction in the commodity futures pricing.
Now that these companies have begun to hedge against higher costs by purchasing their supply further in advance and taking price where relevant, some companies like Cargill are figuring out how to manage for the future. Cargill partnered with Voyage Foods in April 2024 to create chocolate alternative products.
It's not like we have, a huge amount of demand of everyone saying, we just need as much chocolate as you pick out for your chocolate as possible for the next 6 months because, these are storied and loved brands. And because of that, it's much more than just like, we're going to switch out this one ingredient for now.
The big multinational chocolate makers aren't changing their main products for cocoa-based alternatives just yet. But the Voyage Foods founders say they're beginning to consider alternatives.
And so we were seeing a lot of the projects we were being asked to work on is how do we reduce the amount of cocoa and still increase the liking and maintain products that consumers really want to buy.
No one really understands why the futures market is as high as it is because supply and demand would not dictate the price of where it is right now. Right? So look, there's like this EU deforestation regulation that's coming up in 2025. So there's some speculation buying ahead of that. You have people making bets on the weather and if we're going to have a normal crop. And obviously climate change is having an impact on that. So there's all types of speculation going on from that standpoint as well. That's what makes it so hard to read the futures market.
The level of production that we have all witnessed is a signal to us that if we don't support the farmer and by way of assessing financial support to be able to handle some of these challenges, then we are in trouble.